new reality is that that stock that used to be a $30 stock is now a $20 stock. So when I hit the reset button, I had to have puts for a $20 stock. It doesn't make sense to have a $20 stock that's protected by a put with a strike price of 30. I'd rather go ahead and just take some of that cash out, roll that sucker down, and then just hit the reset button and keep making my income. But that's a preference thing. It kind of depends on which approach you want to take, but that's what I tend to do. All right, so let's see. When my shares are called and assigned and I have used margin to purchase those shares with Robinhood, will the money I borrowed for the margin go back to Robinhood or just the funds I invested? Okay, what happens to the money I borrowed for margin from Robinhood? Okay, let me see. My shares are called and assigned, and I have used margin to purchase those shares with Robinhood with the money I borrowed. Oh, I got it. Yeah. Well, what happens, Shaquana, is that money goes back into your spending power. Your spending power is an important number in your Robinhood account. It just tells you how much money you have available to make investments with various stocks. And it's up to you to decide which stocks those are going to be. That's kind of what adjusts. So what happens is that when your shares get called, your spending power shoots way up, and then you've got all this money to play with. So there's always this opportunity to start over fresh and do great things. Khalil, how can I trade options on stocks purchased through Acorn? You know what, Khalil? Actually, I don't think Acorn allows options trading. I haven't seen anything there. Last time I was there, I did not see anything that said that they do. So I don't think that it does. So I apologize. Sorry for that, but I don't think that's even an option, pun intended. Danny, how do you protect your stocks in your long-term portfolio? You know what? A lot of those stocks are more stable. So I don't really, I protect them mostly through diversification. As you guys know, we did that training, Stormproof Investing, on how to protect your portfolio in the event that the market drops. If you go to stormproofinvesting.com, that training's there. I think Prime members, I think we might have put that in your Prime curriculum as well, drboysprime.com. But also, if you go to stormproofinvesting.com, I know it's there. And basically, there's many ways to protect a portfolio when you either are in a storm or you think a storm is coming. So ultimately, with my portfolio, I do most of my protection through diversification because studies show that diversification of a broad portfolio, holding it over a long period of time, keeps it relatively safe. If you're buying S&P 500 stocks, which is what a lot of my long-term portfolio is, either that or stocks that are seen as what they call value stocks, then you can just kind of leave it there and not really worry about having a put for every single share that you buy. You can just simply have the stocks. Now, sometimes you might use puts if you want to engage in some other more complicated strategy. But for the most part, that long-term portfolio can be as simple as you want it to be, and it will build wealth for you. Danny says, is it me or is buying puts more expensive right now? Buying puts could be expensive. I haven't seen any evidence of that, but one thing that can change the price of puts is the changes in consumer sentiment. If consumers and investors start to feel nervous or the VIX goes up, VIX is what they call the fear gauge. When the fear gauge gets high and people get scared, it's almost like when you look up in the sky and it gets really dark and you hear thunder in the background because you know that it is going to rain or it's probably going to rain. The horses start running and all this other stuff. So sometimes that does happen in the market, and you do see activity in the option space. Just the same way a stock can be pregnant, sometimes the whole market can be pregnant. So ultimately, if you see that happening, or if that does occur, or if you hear on the news that investors are nervous and consumers are nervous, and when everybody gets nervous, yeah, that's when you might see some of that action happening in the put market. But a lot of times it's calls and puts kind of together, because typically when a stock is pregnant and you know something big's going to happen, it's weird. You have half the people that think it's going to go up, half of them think it's going to go down, and then that just creates this really active options market, which is a great opportunity if you're involved with it. Let's see. Danny says, can you explain the pros and cons of selling deep in the money call options? Selling deep in the money call options. So remember that we talked about in class, if you buy deep in the money call options that are long-term, then you're basically buying what is called a stock replication strategy. Now, if you log into drboysprime.com, where there are plenty of tutorials, and also there's the Prime 101 that's included, which shows you how to get started and all the beginner information to sort of go along with this course, you'll see that there are examples on how to do a stock replication strategy. I told you all about the stock replication I did in 2022 when the market was down. I did that on Amazon and Chipotle, made thousands of dollars. I wish I had done a bigger position, actually. But still, though, it's life. You can't worry about what you woulda, coulda, shoulda. But basically, when you are the person who is selling a deep in the money call option, especially if there's a long time to maturity, you are selling somebody else a stock replication. So there's some person who says, gosh, I wish I could have a portfolio that follows along with this particular stock. I just don't have enough money. So when you sell them a deep in the money call option, you're generating income by giving them a piece of your action. You're taking risk and volatility that you own, and you're saying, here, you can have it. Just give me money in exchange for that. You have the potential from my asset. I'm selling it all to you. Now, remember, when you sell that deep in the money call option, you're not only selling all the upside. That means if that stock goes up at all, that is not yours. They can exercise that option and take your stock, and it's fine. It doesn't mean that you lost because you already got paid, right? So you're kind of selling a piece of the stock. So in a way, I would almost compare selling a deep in the money call option to a person who owns 1,000 acres of land and they need money. And so they say, I'm going to sell 200 acres of my land and I'm going to sell the water rights to that land. So not only am I selling the land, but I'm selling the potential for the land. Now, that does not mean, though, that I've sold everything. I still own an asset, but I also still, but I'm getting paid in advance for the rights to that asset. So that's kind of what you're doing when you sell a deep in the money call option. You're not selling the whole stock, but you're selling a big piece of the stock. So if you are a bear on the stock, like if you really believe that this stock is going to go south, then sometimes, and you need cash. So if you're bearish and you need cash, like I think the stock is going down and I need some money, but I don't want to sell the whole stock, then yeah, it's selling a deep in the money call option would allow you to do that because you're going to get a bigger premium. You're not going to get as much of that time premium though, because you're so deep in the money. We talk about that in class, but you are getting a big premium and you still are required though to hold that asset as collateral throughout the course of that deal, right? So let's say that stock does plummet. Let's say that you're right and it plummets. Well, you never know. You might still hold on to the stock after the deal is done, and that's kind of how it works. Okay. Last question here. Can you talk more about the pros and cons? Okay, that was Danny's question. Danny put it in there twice. Okay, perfect. All right, guys. So I'm gonna go. But don't forget to make sure you're on the text list. I'll let you guys know when we have class again. Text the word options to 87948. That's options to 87948. Also, if you want to log in and see all the material in your Prime program, there's so much material there. There's stuff for beginners, more advanced stuff, option strategies. You have access to the whole stock options masterclass. All that's in there. So feel free to log in at drboyceprime.com.